Hello and welcome traders. We are going to do a review for the first week of September from September 2 to the 6th of September. So in this week fundamentally on Monday, and this is the first week, so we would have NFP on Friday. Uh, uh, so the best case scenario in CPI, PPI, FOMC, and NFP weeks. You want to trade the first day of the week, and you might settle uh, on that trade, because what will happen, you might get an choppy week, a non-clear price action week. So you might get chopped up on Wednesday if you traded on Thursday. But the best case scenario is to trade the day that comes first in the week. So on Monday we have a US bank holiday. Will we? Is that an tradable day? No. Why? We have a bank holiday. Price will automatically get chopped. So no. So what do we trade? We trade Tuesday, and we must settle for that. And we might get enough for the week, and we just get out. Um, so let's review Tuesday. Uh, at London, we have seen many highs taken out. Okay, as buy side liquidity, we have seen this consolidation been taken out. This one also with the fake run stops, and eventually price came down again after taking this buy side liquidity, and after gravitating to the NDOG and week opening gaps of August. Okay, and the in week opening gap of the Monday, the, the day before Tuesday. So at the NY kill zone, we also did have a consolidation. Okay, price was jagging in this zone, taking efficiency and balance, and then gravitating to the lower side. And it was an immediate move. So with that known, till now we are bearish, not bullish. Zooming out, we have in that case, in these scenarios, after a US holiday, as ICT said, as Michael said, you might get a big large range days, big large daily candles. So just expect that and keep that in mind after trading the day after the US holiday. Okay, so you would mark the low of the days of the of the past 3 days. So we have the low of Friday and we have the low of Thursday right here. Okay, with the new new week opening up of August 29 and NDOG of August 29th. So at 4:30, price melted down, retraced here. Then we did have news. Sorry, let's. I always forget to change the. Yeah, we have news at 10 o'clock. So we would go down to the 3 minute. Let me just. Yeah. So at 10 a.m. we would wait the news to pan out and close out right here. Okay, at this specific area. So we have a buy side liquidity here. We have a minor buy side liquidity, and these will be protected. These ones will be protected as these levels were taken on the higher time frame as a fair value gap. If you gravitated to the 5 minute, you will see this one as an immediate rebalance, an immediate take of an efficiency. This one, this yes, this little rebalance, and to that wick. So uh, keeping that in mind, you won't you don't want the price to gravitate to this area. Let's mark that one as a protected, sorry, protected price. Okay, gravitating to the 1 minute again. Let's make that top. Yeah. Okay. That day I didn't get the trade. To be honest, I was waiting for this one to be taken as a turtle soup and as a buy side liquidity. That was my entry, but I didn't get fill up as this is reacted as an order block, and this one became protected. Okay, so price left without me, and I have closed the day. Actually, I just didn't want to take any more added trades. This should have been an entry, but your sub placement would be just high. Won't be worth it actually to enter this fair value gap. You would have at least a sub right here, and the price gravitated lower, lower, lower. But it was just risky for me. It was not my model. Okay, it was not my way to participate with the price action that is happening here. Okay, because as I told you, I don't have a specific model. I just trade the price action as it is, um, as what it shows me at a specific time. And this is how I trade my. And if you want, if you want me to tell you what is really my model, it's time and price. Simply time and price, and how it reacts at specific times, how it reacts at a key PD arrays at a specific time, of course. And this is my style. This is how I trade. So that was for Tuesday, and as you see, the price gravitated to the to the, the daily low slow again. So as I told you, we have a big ranged day. So what do we expect from the day after? Okay, which is Wednesday. We also have a red folder at 10 a.m. So going to Wednesday, you will automatically see jaggedness in the price. You will see consolidations everywhere. From where to where? From 9:15 p.m. Tuesday to New York, going into the New York and opening bell. Price is consolidating, and is actually a good sign. Yeah, because who doesn't want to trade a consolidation, bro? You would you would easily if you have experience in the market and you literally show up every day, you would know how to trade consolidations, and you would know that the price when it makes its manipulation, it's Judas swing, if you say so. You would want the price to come again at this consolidation at the zero point 0.5 of the original consolidation, which is that one. So let's mark the zero point 0.5 of that specific consolidation. Okay, sorry, I will delete that actually. I'll mark to that one actually, from here to the wick. This is our consolidation. So gravitate Fibonacci, mark out the 0.5 level, which is that one. And just delete the box. Okay, 0.5. We'll get to the middle and to the right. So at 9:30 or 10 a.m. at the news opening, you would want to see a manipulation. So you have consolidation. So that was your manipulation. And if we go to the daily level, we would see what the daily fair value gap, that one, and the 0.5 of the fair value gap. Okay, so just mark it out here. Okay, and back to the 5 minutes. This is the high of the fair value gap, and this is the 0.5 of the daily fair value gap. Okay, daily fair value gap. Alright. So this is how you want to annotate your chart. Okay, exactly. Now we go. We want to. We want the news candle to close out. Did right here. Sorry. Man, it's close to at the daily fair value gap, so we won't mark it actually, but just keep it in mind. Okay. So the price, the candle closed at the high of the daily fair value gap, close to it actually, and you would want to annotate the first fair value gap after 9:30, as ICT said in the 2024 mentorship, in his mentorship. Uh, and as I told you again, uh, I would like to see the candle after the news at the 5 minute time frame closes out also. So with that, we go to the 1 minute again, and this is our closing price. Okay, the 10:10, right at this candle, 10:11. Okay, so I'm gonna delete that. Just keep that in mind. Okay, so what do we have here? Bullish scenarios. Sellers have gone out. Buyers who have put their stop loss at these lows were out, and early buyers have gone out. So with that in mind, all parties were ruined. So we have a fair value gap here. We have a protected low here, with the price gravitating to that fair value gap and the fair value gap after 9:30. So we have a multiple key references and a key PD arrays. And with that, you would simply limit the price right here. Just grab a Fibonacci from body to the body. Where is the 0.5? and the discount area right here. Of course, if you want, you can make limit order here, and you can make it here. If you want to see, if you want to participate in a closing candle, you would wait the 10, 12, which the way it reacts, you would feel that the price would want to go to that fair value gap. So you limit it. That would be your stop at the high, or at the 0.5 of these candle wicks. Okay, so I'm just gonna leave the stop loss here, and I would simply look for buy side liquidities. We have here, we have a relative equal highs here, clean and smooth actually. Okay, clean and smooth. Those one. Okay, not the candles, but those ones. Okay, so that's a buy side liquidity right here, and a liquidity void. That that is going to be taken and will be taken in the future. Yep. So we have a good TP, we have a good stop loss, and here you go. Easy as that. That was for Thursday actually. It was a clean day actually, and yep, clean delivery. So let's delete those. We don't need them anyway. Going to the Thursday. Now going to the Thursday, we have unemployment claims. We have ISM at 10. So we would wait at 10 a.m. and trade afterwards. So in that day, many of you actually have participated in these sales. Well, I was a buyer actually at that day. I just didn't see the selling pressure, and I really wanted to see the price going to gravitate to the in-week opening gap of 29th of Julio, but of July, but just didn't get right here. So my TP anyways was here. I have taken that this specific trade. My stop loss was close to the 0.5 of these order blocks, because the way of the order blocks formatting, if the price gravitated to them, they would simply taken out that law, and it would be a market structure shift, and we would have taken these laws. So nope, that so I was comfortable placing my stop loss here, and that was my TP right at this high. So my entry was at this specific fair value gap. I got filled at 10.10, and boom, in literally 10 minutes. In 10 minutes, my TP was crashed. So yeah, that was my trade actually. So let's talk about the sell opportunity. We can go to the 15-minute. We would like to mark out this sell side liquidity of the market and this buy side liquidity of the market. Okay. Yeah. Okay. Going to the 5-minute. When the buy side liquidity have been taken, you will want to see a run stops. Please just don't anticipate without a run stops, even on a 1 minute. Okay. Just wait for a run stop, because many ICT traders have gotten into that trade. Okay, this one, Amar, 2020 ICT mentorship model, a raid on a buy side liquidity or sell side liquidity, a run stops, but it's just not obvious. Okay, an immediate sell an immediate market structure shift. Was there any fair value gap? No. Was there any breakaway gaps? No. We did have that fair value gap, and you would want to see if okay, let's say if the price would want to go down, why the price would have closed on the zero point 0.5 or consequent encroachment of that fair value gap literally after the fair value gap form. Is that a good indication for you to sell? No. So you would wait. That's what. Run stop. That's what. A market structure shift. And that's your entry. Your stop placement will be at the wicks, gravitating to the highs. Yep. So an obvious run stops on the higher time frames, on the 5 and on the 15-minute you would see a turtle soup. And no, not a CRT, because CRT is literally a bullshit model, and it is not even a model. How can be uh, that every candle can be a CRT? It just can't, and you can go out here every day guessing that let's say this one is going to be CRT. I mean, come on, it's just not realistic. CRT is absolute bullshit, like Michael said today. Michael literally, I've gone on Twitter. He have logged in since like months. Literally, he left Twitter for months, and he came back today, and literally tweeted that the CRT is bullshit. I mean, like, come on, makes sense. Just waste of time, bro. Like literally just trade price action. What makes sense, not what not. So we did have that run stop. We did have that turtle soup at the 15-minute. So now going on to the 1-minute. What do we see here? If you really wanted to be a seller, let's say you wanted to sell here, your stop loss would be so big. So and that's a system rule in my rules. Like technically, if my stop loss after the market shift is so big, I would buy or sell early before the market structure shift, and I would be so confident of the trade if I was on side. And in that case, in that scenario, you want to look for fair value gaps that will eventually be inverse fair value gap, that will eventually be inversed. So we have a liquidity void right here, bunch of fair value gaps, and if we gravitated to the 5-minute, you would also have a fair value gap. That's a good indication. That's a good indication. If you really want to be a seller and your market structure shift is more far away than the higher high or the lower low, then you would want to be looking for high fair value gaps, that will eventually be high fair value gaps. So with that said, uh, let's mark out this one to that one, actually to that one. Okay, now you could be seller here, and your stop loss would be above that proportion block or that order block. Is that your TP1? Absolutely yes and no. When yes and when is no. if you okay, you want to see a 5 minute candle to close out. If it after the market shift, if it was closed with a big range to the downside also, or vice versa when bullish, the big candle high. If that happens, you just don't close your partials. But according to that candle, after the market shift, after that candle, after 10:45, here you would want to close your partials right here at 10:50 at the close of 10:50, and that would be 10:55. So at 10:55, you would close out some partials, and you would attack this sell side liquidity. This one is your sell side liquidity, and this is your final target. But you can be satisfied going into that trade and just close out everything. Come on, bro, it's 3.34. What do you want more? uh, so, yeah. So, as we have said, 10:55, yeah, partial. And if you want to take partial here, take. Yep, beautiful. And if you want to close here, just close it out and be satisfied for the week, because this is the last day you will trade on the week. You just don't want to trade NFP. Okay, yep, that was it. And like I said, I don't trade NFP, I don't trade CPI nor PPI, so we won't be going to review the NFP week, the NFP day, because it's just nonsense. Just don't trade these days, bro. Trust me, you will save so much money. You will save so much money. So it was a good week. Uh, clear price action, clear price action for an NFP week, and it is surprising actually. I didn't expect to have a clear week. So we did have it. So yep, thank God. And yep, that's it. Till next time, until next week. Be safe.